June 19, 2019 Stock Market Manipulation. Look at the wild swings just before, during and after words came out of a Federal Reserve meeting that might speak of stupidly lowering interest rates. The Fed has two mandates, one of which is fostering full employment, which is a farce in that it has no tool to make this happen, and the other is price stabilization. Everyone should know that the Fed has been going against this second mandate by promoting an ever-increasing stock market, and what goes along with it is home prices keep going up and everything else. The middle class is getting fleeced, and yet the Fed does not care how this is both hurting society and the economy. Already at a record wealth divide and record homelessness, the Fed wants to continue making things worse. The wealthy will big up home prices even higher, shutting out others from being able to buy, and rents will become even more oppressive. So this is what the Fed calls a stimulus. It's an anti-stimulus, as I've been telling the Fed over the past 10 years. While there are YouTubers making their $10,000 per month making 1 or 2 videos per day rehashing what is in online articles, I have been fighting for the common person. No one writes the Fed as much as me, no one. So what do you want? Someone who recites the news that you can look up on your own elsewhere, or do you want someone who works for the people, educating about what is going on in the economy and stock market? I hope many will wake up to this. Now look at this chart, the wild ups and downs. I assure you, it's not millions of investors making this happen. You know, Wall Street is at its usual games: gamble, pump up, take down, and as long as you had big money to capture the small spreads you could do fine, but that's not likely the case. It is erroneous, as I have noticed many assume that when stock prices are crashing, that this is manipulation. Hardly the case. It's clearly more on the upside, and so much of the selling is natural. Though of course there will always be in this pernicious system the manipulation on both sides. Many assume wrongfully that short sellers are bad. Well, again, this is patently wrong. Short sellers provide liquidity so prices become more stable. When valuations are absurdly too high, it's not investing by overpaying. When there are little viable alternatives and while short selling is allowed, why not invest being on the correct side of fair value? This is investing having a good notion of the fair price and putting your money to work being on an advantageous side. So if a company you know little about, or think you know so much about, with a P of 300 and you get angry over a precipitous drop, you should ask yourself, why did you pay so much, not why the price is dropping. The big Wall Street firms make huge sums of money almost every single day. You would be hard-pressed to find the last day any firm actually lost any money. They control the prices and the middle class goes for the ride. In other videos I will explain that those in the middle class going long the market actually hurt themselves by promoting a wider wealth divide. Moreover, the churning that goes on with 401k accounts is benefiting the wealthy. Do you like how this works? Tune on, I will give you the scoop.